In a dramatic turn of events, major U.S. banks have taken a bold step against the Federal Reserve, challenging the very framework that governs their financial stability. This legal battle is not just about numbers, it's about the future of banking oversight in America. Let's dive into the details of this landmark case and what it means for the financial landscape. The lawsuit, filed on December 24, 2024, by a coalition of banking trade organizations, including the Bank Policy Institute and the American Bankers Association, raises critical questions about the transparency of the Federal Reserve's annual stress tests. These tests are essential for assessing how banks can withstand economic turmoil, but the banks argue that the current framework lacks public input and fails to meet legal standards. As we look at this graph, illustrating the results of bank stress tests conducted by the Federal Reserve, it becomes clear that the stakes are high. The fluctuations in the data reflect the resilience of financial institutions under stress. But the banks are calling for a more transparent approach to these evaluations. Here's a bar graph showing the results for banks under the severely adverse scenario. Each bar represents a different bank's performance, highlighting the varying levels of capital adequacy. This visual representation underscores the importance of understanding how banks are evaluated during economic downturns. This table summarizes the 2023 Federal Reserve stress test results, showcasing capital ratios for 23 banks. It's essential to note how these metrics reflect the bank's ability to withstand severe economic conditions, which is at the heart of the current legal dispute. The Common Equity Tier 1 Capital Requirements graph illustrates how banks like Bank of America and JP Chase have navigated regulatory expectations over the years. The changes in 2023 figures are particularly noteworthy, given the ongoing legal challenges surrounding the stress tests. In this news broadcast segment, we see the breaking story unfold. Major banks are making headlines as they file a lawsuit against the Federal Reserve. The implications of this legal battle could reshape the regulatory landscape for years to come. This flowchart outlines the components of the stress testing process. It emphasizes the importance of analyzing financial statements and simulating hypothetical economic scenarios. Understanding these elements is crucial as banks push for more collaborative regulatory practices. The iconic Federal Reserve Building stands as a symbol of financial oversight. The ongoing legal discussions reflect the evolving relationship between banks and regulatory bodies, highlighting the need for transparency and collaboration. As we conclude, the legal challenge posed by the banks signifies a pivotal moment in the discourse about regulation and transparency. With a looming statute of limitations, the outcome of this case could lead to significant reforms in how stress tests are conducted. What are your thoughts on this legal battle? Do you think banks should have more input in the regulatory process? Let us know in the comments below. If you found this video informative, please like, share, and subscribe. Don't forget to hit the bell icon for updates on our latest content.